Okay. I think we're live now. I guess so. Um, okay. I think we're live now. I guess so. Um, okay. Okay. Let me get some comments in the chat if you can hear me. Let me get some comments in the chat. Yes, sir. Good evening. Good evening. I guess most people here are in Nigeria right now, so it's like evening time. So let me know if you can hear me clearly. It's not going to be a long class. We're just going to get into it now. And yeah, let's go to it. So let me know if you can hear me. Let me see. Let me see in the chat bot. Let me know if you can hear me clearly. If you can hear me, just drop a comment in the chat box. Let me know. Okay. Happy New Year, everyone. Happy New Year. How is the year coming up? And I hope everyone is good and in great spirit. And yeah, this year it's going to be an amazing year for everyone here, And my, goal and honest wish for everyone is for everyone to be able to, you know, um, be profitable, so that you don't move in circles. So I guess everyone can hear me now. Yeah, I guess everyone can hear me now. Just a second. Yep. Okay, so without wasting more time, as you always know, I always try to give us some very great nuggets as regards to trading. And I would say the year is just starting. That means you have the gift of time on your side, you don't want to move in circles. You want to make sure you do what is right. And if something, you should have picked from, my teachings, as always, the trading system, you have to systemize your trading. That's when you can get predictable results, right? So, systemizing your trading would mean that uh, you're long-term driven, right? Systemizing your trading means you have certain parameters that you trade, and you need to be able to get yourself to follow your system. Once start to have strategy, once you start to have, a working strategy or something that works, you realize that at the end of the day, the next thing you need to do is to get yourself to always execute your strategy and your system, right? And that is what I want everyone to do this year, because every time you have to keep growing. You know what I mean? You have to keep growing all day. You have to keep growing. You can't do the same mistakes of last year. You can't keep giving on excuses. You can't keep jumping from one prop firm to another and trying to flip accounts and all of that. By now, you should know that that is not sustainable. And I'm talking to traders who really genuinely want to trade to freedom, right? So I urge everyone to be much more calculated this year, be much more systematic this year. Don't, you know, don't get yourself caught up in the act of just trading to trade, right? Trade with a purpose, have a plan, have a have a long-term, vision of what you want to do, right? And trade with so much clarity. Trading is not supposed to be stressful. It only gets stressful when you don't have a plan and when you don't follow your plan, right? So this year we are all trading on soft. Do you understand what I mean? Soft trading. There's no tension trading, right? The game is supposed to give you freedom, right? It's not supposed to keep you in, under tension and whatever, whatnot, right? So the game is supposed to keep you free, not the other way around. So with that being said, I'm just going to break down the market on what I'm looking at this week so that you guys can have some sort of like idea of, what I'm doing. And one thing I've been doing since late last year is I am not giving people fishes. I'm teaching people how to fish, right? So you probably, when you come on my Telegram, you're not really gonna see me throw a lot of like signals. And I just share like ideas, and you do whatever you want with the idea. And it's so amazing the kind of result I'm getting, right? And we get like random messages from people who kind of use the idea I drop to just kind of validate their own, and they're able to take that trade and they are building and developing themselves like personally. Because at the end of the day, it's not a pride for me to have a community and everyone just depends and rely on me, right? That's not a burden I would like to carry, right? But one thing I want is that as long as you're in the Swing Trade FX channel, I want to be able to drop something so valuable that you can be self-independent, right? I don't want you to depend on me. I want you to be a trader all by yourself by just being closely, aligned with me, right? So it's very important that you become your own trader. This 2026, take it really seriously and don't trade like someone that has an option. Literally, when you trade like someone that has no option, that means you follow a discipline strictly. You start to see that, you start to get, better, right? And do all the right thing. That means have a strategy, have a way you analyze the market, have your confirmations, have your, exit. How do you take your exit in different market scenarios, and document your trade. Documentation is going to give you data. That data is what you're going to use to realistically project what you can make. For example, I have an idea of my projection, what I'm looking forward to making this year. So if I say I'm looking forward to make $1 million, for example, I'm not looking forward to $5 million. If I say I want to make $700,000, for example, I'm not looking to 1.2 million, right? So I use my data to kind of make an accurate prediction of what my possibilities are this year, and I stay within that. And in that way, it kind of regulate my mindset. So I'm not chasing trade. I know the average number of trade I'm probably going to take this year. I know the average number of trade I'm going to take in a month, in a week. I know what my expectations are. And this is where you transition from the knowledge of operation to the knowledge of knowing everything about your trading. Okay. So I just sincerely wish everyone can follow this less traveled road and just leave the circle of the 80 and 90% that are doing it the wrong way, and join the circle of the 10, 5% that are doing it the right way and they're making the most money, right? And one thing I would love to say is give yourself time, patience, right? You can't make $1 million in a week. Okay. Some of you trade like you're going to make $1 billion on one single trade. So you spend so much energy on that trade. So I would not recommend that. So now let's get into how we analyze the market. And I would say when we want to analyze the market, I use the multi-timeframe analysis, and it's very important that you carry out your analysis using multi-timeframe, because at the end of the day, what is analysis? Analysis is we're taking different data and we're looking at it and we're building a bias of this data. So multi-timeframe analysis means that you are looking at different time frames to gather this data so that it can give you a much more informed information, and helps your decision better to know what next you want to do. And that's just why multi-time frame analysis is way better, because you can see different contexts, you can see different areas, you can see different you can see like different views of the market, in every single angles, right? So you can correlate this data together and build a very solid bias. So it's just like you've never been outside of your location before. You can't compare your level of exposure to someone that's been around the world, that's traveled the world, right? So that is the same thing with monetary from analysis. So I'd recommend it all the time. So it's always good to start from the top and work with your way to the downside. And now you can make a detailed and informed decision and just look at what opportunity the market gives to you, correlate it or run it through the lens of a strategy. Is this a good one for me? And take it if it's a good one. Don't exit it, right? If it's not a good one, you want to stay out and wait for the next opportunity the market gives to you. And this is how it is done in trading. And one thing I would say this year is don't be afraid to take a loss. Loss is part of this game, no matter how good you are, right? Yes, we can have different efficiency rates, We can have different win rates, but loss is part of it, right? I still take losses, right? There are times I have a lot of winning streak. There are times that I have 2, 3 losing streak. But what makes money in trading is not the number of trades you win. It's what makes money in trading is very simple. Keep a consistent risk and make sure your risk reward is about 1:2 and above, right? So for example, my average number of trade gives me 1:4, 1:5, 1:3 sometimes. And that is more than enough, right? And I have a win rate that is up higher than 75, and I'm going like 80, 85, right? And in that case, now you have a high win rate now coupled with consistent risk, and you have a high risk reward. That's all, right? And I love to tell people even a 40% win rate can be a profitable strategy, provided your risk is kept consistent and your average risk reward per trade is 1:2. That means out of 10 trades, if you win 4 and you lose 6, for those 6 you lose, let's say you're going 1%, you lose -6%. For those 4 you win, that means 4 times 2, 8%. 8 minus 6, you are still helping profit for 2%, right? Now, imagine you are having a 1:3 of risk reward on the trade. For those 6 you've lost -6%. For those 4 you won, that's 4 times 3, that's 12. 12 minus 6, you're still up plus 6%, right? So this is how to think about trading, okay? It's not just about being on the chart. You need to have a set of way of thinking. You need to have a set of thought process around trading. Then when you execute and go on the chart with that mindset, you find out that you trade from a place of ease, because now you've understand the market beyond what you see on the chart. You understand what it means to be a profitable trader. You understand the parameters that makes one profitable. So you are not trying to achieve your dream on one trade, or one trade is not going to destabilize you, right? You know that you get to judge your win rate or your profitability over a series of trades, not one trade, not 2 trades. You understand what I mean? So that is what I would recommend to you guys. So now, without not going too far, I just can't help. I love, touching up on the psychological part of trading, which is an area that, I'm very interested in, and all of that, right? So let's get into how to let's analyze the market for the week, right? So so far so good. This year has been very bullish. And if you've been in my community, if you have not joined my community, I have a lot of stuff coming in this year. I've been strategizing and making, plans and all of that. So you can click on the link in, any of my video and join my Telegram channel. And, if you really want to join my mentorship also, you can text me on Telegram. I will never text you first. I will never ask you to come to me, right? But if you, really want to take a different steps this year, you can always hit me. So now, the first thing you want to do is just to kind of see the context of the market. I think that's the most important thing. You want to understand where the market is going to from a structural standpoint, right? And for me, one thing I could see right here is just to tell the story of the market. So what do I know? I could see right here that the market has been selling since 2009. From 2013, we saw the market, give us a strong push. And what do we have right here? We have the change of character of the market, and we have the market pullback, to give us more of a retest, or give us more of an exhaustion. And then again, we start to have the push, and the push also is being characterized by a change of character. And what do we have? So we have a situation whereby the market is coming on the low side. We have an area of resistance right at the zone. I want you guys to pay attention, because I want to do a very comprehensive analysis, right? So we have this area of resistance where the market has been rejecting the market from. And it's very important that you do your analysis this way, because it gives you a context of what the market is doing, right? And what do I have right here? I saw that the market was giving me a sell to the downside. Then we seem to have, from a monthly time frame perspective, we seem to have a change of character right here. Okay, so we have a change of character right here. This change of character led the market to making a new high. Then we have a higher low right here. So what do we have after this change of character push? We have the exhaustion right here. Then we now have the change of character to the upside. So that is very important for us to see, right? So what do we have right here? After the market changed the character, the market went into, at the point, this was a high. Okay, This was a high at the point, right? The market came back and retraced, then we found this low right here. The market gave us an exhaustion to this low right at this level. Then again, we have another change of character for this retracement. So this retracement confirms that it has ended right at this change of character. And after the market broke it, the market went on to the upside and the market broke this level right here. Do you see that? So are you guys with me? Let me know in the chat box. Let me know in the chat box. Are you guys with me? Let me see your chat. Let me see the chart. Are you guys following what I'm doing? I just want to make sure that you guys are connected and locked in. Let me see in the chat box. If you can hear me, if you're understanding what I'm doing so far, let me see that in the chat box, okay? Yeah, I'm reading through the chat box right now. So let me know in the chat. Let me know in the chat. Can you guys... Perfect, perfect, perfect. Yeah, yeah. Okay, that's so good to know that you guys are following through 100%. Yeah, this is how much I want you guys to be locked in this year. That's so good, so good, so good, so good, so good. Love that, love that, love that. Okay, so now you can see how we're breaking the market down, right? We're telling stories, okay? You can see how I'm not overly technical. And this is how I preach to everyone to always trade, okay? I'm not overly technical, right? I'm not trying to do anything that I don't have to do, right? So now, what do we have right here? So we have a situation whereby the market, after this change of structure, character, we have the market broke this level. So what do we have right there? The moment the market break that level, this is no longer a high. So what do we have right here? This become a break of structure, right? So we literally have a situation that the market is rejecting this level, high to this level, low right here, change of character, and the market has broken the structure. And you can see the market give us a pullback and the market continue going back to the upside. So what do we have right here? So I don't need all the informations, okay? I don't really need all the information. What I just need here, just give me a second. Just give me a second. Okay. So I don't need all the informations here. All I just need to know is the fact that the market, when the market got here, we got the markets, breaking this level, and we have a break of structure right there. So the next thing we want to do is we want to read the flow of the market going to the upside, because now we know for sure that the market, is targeting this level right here. So we want to look at the flow of the market going to the upside. So what do we know? We understand that the market has been moving on a very bullish structure. The market has been giving us a higher lows and higher lows, and this was the high that broke the structure. And you can see that the market gave us some sort of retracement to this level, and then the market started to pick up to the upside. So if you want to measure the retracement, you want to be able to just identify, the Fibonacci level, and you can see right here that the market reached this Fibonacci level and the market started to push up to the upside. So what do I do? The next goal is for me to identify where is the low part where the market kind of, got to before we start to have the market push the upside. So this is the next thing I want to be able to target, right? So all I want to do going forward is just to target the level where the market got give a sudden injection into the trade. So, we have the zone right here where the market started rejecting from, which is the previous area of resistance, turn support, and right after the market hit this level right here, you can see right here that we had a very strong push to the upside. So right here we have, a higher low where the market is rejecting, and ever since then, you can be able to see right here that the market started to just make a very strong push to the upside. So we have this level right here. So our goal is just to keep, looking at the flow of the market until we get to where the market is at. So now what do we have here? To tell the story correctly, remember that we saw that the market broke this level and it started to retrace. What did the market do? The market retraced to the fib level, broke the structure, gave us a pullback right here, and the market started to jump up. Now, what does that mean? When the market gave us this break of structure, it went ahead to make a high right there. And what happened right here at this level? I want you guys to pay attention. So when the market got to this high right here, what do we have? We have the low. Then from this jump right here, the market went and took off this high right at this level. And that is the information that we need. So when the market took off that high, it gave us another break of structure, right? So now this is our zone of interest. So when the market breaks on structure, what do we have any information on the lower time frame? So what do we have? We go to the daily time frame. So what do we want to see on the daily time frame? Okay. I want you guys to pay attention, okay? What do we want to see on the daily time frame? So we can see right here down the daily time frame after the market started to, jump off above this level. Just give me a second, guys. Perfect. So you can see that on the daily time frame, after the market rejected this level, the market started to move on a very strong uptrend up to this point. So that is what we want to see. So our goal is to be able to identify this trend to the upside, identify, the different significant structures right to that level, and just keep following the market as the market keep going to the upside. So what do I have? So from a daily time frame perspective, I want to be able to identify the structure. So I have the market moving on higher high, higher low, higher high, higher low, higher high, higher low. You can see the market moving on higher highs and higher lows right here, higher highs and higher lows right here. Then we have all of this level, the market moving on higher highs and low right here, higher highs, higher low. And there's a very significant information right here. So I could see that when I look to the left, I saw that the market is rejecting a very strong level, right? So these levels, after the market rejected this level, you can see that we started to have even way more stronger, bullish movement in the market, right? So notice how I'm just highlighting major levels when the market hit and the market continued to, just push the upside. So that's what I want to see on this pair, right? So now we seem to have the market giving us a higher high and higher low, and we now have what seems to be a break of structure right at this level. So the next thing I want to do is to identify this structure to the upside. So I really want to look at this trend. This trend has moved to this level that caused the break of structure. I really just want to keep pushing to the upside. Yes, for sure. I know exactly where the market is going, but of course, the market can just keep moving on a straight line. At some point, the market will make some retracement. The market will move in the direction of the trend and, sort of stuff like that, right? So with that being said, what do we see? So the next thing I want to do is I really want to just identify, the structure of the market after the market broke this high. So what do I see right here? All I have to do is to understand that the market has been moving on a higher high, higher low structure, higher high, higher low structure, higher high, higher low structure. And this was the first time the market broke the structure and the market retraced back to this level before we start to have this push. Now, this is a very important level for me to consider because after the market broke this structure, now we begin to have a previous area of resistance right at this level turn into a support right at this level. And that is very important for us to know. So again, I identify this level right here as my zone of interest, right? So now I have a situation whereby the market is giving me a very, very interesting, higher low level right here. So this is what I want to see. Okay, guys, this is what I want to see. So now the question now is, the market got to this level and the whole of last week we started to have a push to the downside. So from a daily time frame perspective, I want to look to the left, right? When something like this happens, when we know that this is where the market is going to, and then we have a rejection right here. For me, out of curiosity, I want to know what really happened right here to the left. So when you go to the left on the daily time frame and you expand the chart and you expand the market, you can easily see why the market started to reject because we have this temporary area of resistance. So let me identify this level. We have this temporary area of resistance. Now, why do I call it the temporary area of resistance? Those levels can cause the market to react, but they cannot necessarily, reject the market. So the market is going to get to that point and retrace temporarily. So more of like the market reaching this point, retracing temporarily before the market finally gets to where we needed to get to. So that was what happened last week. And that was why I called a sell trade from that level last week for people who, have been following me. So you can see that exact level where the market was rejecting from. So the question is, how far can this level reject the market before the market continues to push to the 215 area? Yeah, I keep calling the 215 levels out, right? So how far can the market go? So now what we want to see right here is now to keep identifying the structure of the market. So I have a situation whereby the market is moving a higher highs, higher low. We have a higher high right here, higher low. You can see the break, higher low, and now the market is giving us a high. So now there are two things that comes to mind, okay? Could we see a situation whereby the market will move back to the Fibonacci level, here? And, will the market give us a very strong push to this Fibonacci here from a daily time frame perspective, and the market continues to go back to the upside? Because we know for sure that the market is going on a very strong upside, right? Or perhaps let's take it to the 4 hours time frame to see what the market is actually doing. So from a 4-hour time frame perspective, what do we see? It's very simple. After the market turned this previous area of resistance into a support, right? We want to see the flow of the market, how the market has moved. So what do we have right here? We have a situation by the markets continue to move on a structure level. So you have to have a solid understanding of the structure, right? And after the market made a high low right here, we found this retest on the lower time frame. The market keep moving to the top and keep giving us this bullish structure right to this level, and here we go, right? So from this time frame, we have two things in game, right? I want to identify the most significant low that the market has been rejecting from. So I have this low right here, and this has been the last the most significant high low that the market is rejecting for. At the end of the day, I'm trying to find those specific structure points where the market will find a rejection from, right? So that means I have this higher low right here. And if the market continues, now I can say that the market opened up with a very strong gap. But if the market respect this level back and give me a change of structure in the lower time frame, perhaps I could be looking forward to picking my buy, anywhere from this level, right? Why is that? Because not only is that level a very strong Fibonacci level, I can see a very strong previous area resistance right there from that level to, where the market could turn into a support. So this would be my first level that I'm going to be looking at for the market to give me some rejection. Now, if the market should break below that level, again, before I execute this trade, I have to see a change, of character of the structure to the upside, okay? So I'm not just going to jump into the market because, this level rejecting the market as we identify on the daily time frame is a temporary level, but it's a very strong level as well. So we want to be careful with what we do, right? Now, the second thing that we would be looking at is that if the market eventually decides to wanting to go down this level, then I can be able to bring my Fibonacci to this level and say, you know what? As far as the market continues to move to this low, then I can find a fib level, wait for change of character, then I can decide to be pushing, right? So right now, all we can see right now is that the market is pushing, right? The market is pushing towards, this higher low right here, and we have this level right here. So the question is, will the market fill in this gap and give us a rejection? And on the lower time frame, which is the 1 hour and the 15 minutes time frame, can we have a change of character back to the upside that we're going to keep buying? And if that happens, definitely I'm looking at this level for take profit. So this level would be one of my targets. Then the 215 level is going to be my second target. So now the question now is, what happens to the market right here? The market has just opened with a very strong gap. Will the market find its way to the upside, or will the market pull back? So what are the other confirmations that I want to see? I could be having a trend line, right here, and which is way more obvious on the 4 hours time frame. So we have a trend line right here that has been respecting. So could this be another level where the market, we offer us a trend line rejection? You know what I mean? So these are things that I'm looking at in the market. So I'm not going to be in a rush to execute the market. So here I'm just going to wait on the 15 minutes time frame, right? And I'm looking at these zone. These are my zone of interest. I see the gap. I know the gap eventually will come back to fill. So I'm waiting to see what the market does with this zone right here. If the market probably finds its way back to the upside and, give me some sort of like structural push to the upside, then you probably would find me on this trade. And I'm going to swing this trade all the way to the top. So if the market hasn't done that yet, all I know right now is that I would love to see if the market will actually respect this fib level right here and close back above it. That same level is a previous area of resistance, turn support. So these are very strong key confirmational level. And I can see that the trend line right here, we have the touch one. Let me identify it clearly. We have the touch one, touch two, touch three got broken, and touch four hit it right back. So with touch five, is this market going to hold and probably give us something like this, reject this level right here, find some sort of like, change of character, and then we're going to buy. So the question is for the market to answer. So this is the level whereby you have your setup in place. I know if the market continues going down, I have another plan to this level. But right now, where the market is at, this is what we're seeing right now. And we just want to identify what the market will do on this level. So we are expecting the level to the market to cross back into this level. We are waiting to see what the market does at that point in time. Then we're going to be waiting on the 15 minutes time frame, which is where I'm going to find my change of character to the upside. Once I have that confirmation, which is the last thing I'm waiting of character to the upside, perhaps the gap gets closed and the market finds a confirmation to the upside, I'm not going to exitate. I'm going to take this trade directly, and this is what I'm going to do. So this is how to wait for the market. And I wanted to say something that because you've analyzed the market does not give you an absolute right to executing a trade, okay? After analysis, wait for confirmations to happen. I hope everyone is learning what I'm talking about here. After your analysis, right, always wait for execution of a strategy to confirm your execution. So what is my confirmation right here? For me, I'm personally just waiting for the market to give me more of like a change of character to the upside, and I'm going to find my execution right here. And this is what I'm waiting for, right? If that doesn't happen, there's no trade for me, right? But what I've simply done is I've been able to identify the reason why the market is falling down. I've been able to identify the fact that the market is still going to make a push, to the 215 level. So I'm clear about the context of what the market is doing. I'm not swayed by the retracement the market is making, right? I'm clear about this subject, and this is what I'm going to be doing, right? And this is how to trade. Understand the context of what the market is where the market is going. If the market is making a retracement when the overall trend is going to the upside, just like in this case, find the reason why the market is doing that. Then the next thing you want to find the possible level that could continue the trend in the upside, right? Provided that you're certain from a structural standpoint that the market is moving to the upside. So this is how it's being done. So the only thing that we're going to wait for right now is wait for this gap to correct. Don't try to jump into the market. Let this gap, let it correct, get into the market, and let's do whatever we want to do. And let's do it with so much clarity, okay? So right now, I'm probably going to wait the whole Monday and wait for the market to correct itself, give me some more information, give me my confirmation, and I'm probably going to join this trade. So I'm going to be giving you guys an update in my Telegram channel to show you guys, however it plays out. If the market starts to go down below, I have a plan. If the market continues to go to the upside, I have a plan as well already. So I wish you guys the very best of luck. Have a very wonderful rest of your week. If you have any question, you can join my Telegram group and click on contact at me, send your questions in directly, or if you have any inquiries to make. And I'll see you during the week with updates.